I want the community banks to thrive. I mean, like I said, we want to do everything we can to help them. We didn't want this to happen. We didn't cause it to happen. The second it happened, we knew it was bad for all banks. It's very unfortunate.
In today's video, JPMorgan Chase Chairman and CEO Jamie Dimon discusses the recent regional bank crisis and possible regulatory changes for the industry, the purchase of First Republic, and the risks of a potential U.S. default.
Debt ceiling or banking turmoil, what are you most worried about?
Well, I think the debt ceiling is potentially catastrophic.
Yeah.
So that's a whole different issue. Hopefully it won't happen. The banking crisis, I still believe, will kind of sort its way through. And it's not anything like 08 or 09. Only a couple of people are offsides with all these various things, which you knew about. So hopefully, it's getting near the tail end of that.
But if you're Janet Yellen right now, what would you do differently?
I don't know. I think we need to finish the bank crisis. I think we've had uncertain policy on mergers, this First Horizon deal. I think we have to assume there'll be a little bit more. Yeah. So, whatever the FDIC, the OCC, the Federal Reserve, whatever they need to do to make it better, they should do. Be thoughtful, be very forward-looking, not be surprised constantly, because some of these things have been known about for quite a while. And so we've handled three: SVB, Signature, First Republic, and so.
Yes, so
but I think it's very important. The regional banks, who I've been speaking to like every day for the last week, they're quite strong. They're quite worried because of the run on deposits, like that. But their financial results are good. Their financial results are going to be good. Okay, next quarter. They're earning money. They got a very good clientele, very diversified. And they're quite strong.
So, Jenny, for like a comprehensive solution. So if you're asking Janet Yellen to get the job done, what does that look like, that solution?
I'm not asking for a comprehensive solution.
Why not?
Just be prepared for problems. We don't need a comprehensive solution.
What do we need right now? Do we need regulators to look at short sellers of banks?
Yes. Look, my folks would tell me that that's not the problem, the short selling ban. If you actually analyze stocks and short sales, doesn't seem that big a deal. I think they may partially be wrong because, as you know, some people are unscrupulous and they use other means to go short. I think that if you look at the detail, the SEC has the enforcement capability to look at what people are doing by name in options, derivatives, short sales. And they should go, if someone's doing anything wrong, people are in collusion, or people going short and then making a tweet about a bank, they should go after them. And vigorously, and they should be punished to the full extent the law allows it. So I think it's possible it's taking place. We have no evidence of it, but my experience in life has been, don't assume too much. The people to blame are the bank CEOs and the bank boards and things like that. Having said that, I think there's been a humility on the part of regulators that the Federal Reserve itself never forecast interest rates going up. Not one Fed governor forecast it, and whether you forecast it or not, you should be stress testing people for it. Their stress tests always had low rates. We always knew about uninsured deposits, and there were huge incentives that banks to put securities in held to maturity, lower capital requirements. Huge incentives to own treasuries, lower capital requirements, and they counted for liquidity. And I'm hoping all that gets looked at, and they should look at it and say, yeah, okay, we were a little bit part of the problem, as opposed to just pointing fingers.
So this is not a regulation problem, it's a supervision problem.
Yeah, it's a little bit of both. They become very related. I mean, supervisors look at, are you doing the right thing by regulations? And like even the stress test, I've always thought that when you have one stress test and you have a company completely focused on that for 3 months, does it lull people to a false sense of security that all these other things aren't going to happen? And all these other things in history always happen. And so, I think it was a little bit of a mistake to have one stress test. I'm not asking them to do many at this level of detail, but our stress test is 200,000 pages long. Do you think that last 100,000 pages added value? And my view is it did not. I think that people...
What do you mean by worse?
It's just more regulations and more rules and more requirements. I hope they do it very thoughtfully because, we love the community banks, the regional banks. We're the biggest banks of those folks. But if you overdo certain rules, requirements, regulations, some of these community banks tell me they have, more compliance people than loan officers. And so at one point you make it harder for them to do business. There are already hundreds of rules in place, and in a lot of ways it's the mix of the rules. If you're going to change liquidity, maybe not capital. If you're going to change capital, maybe not liquidity. If you're going to add TLAC, then maybe you should do something with deposit insurance. They should sit down and have a very thoughtful conversation about what those things are and what we want the outcome to be. And if you look at the present outcome, a lot of things are leaving banks, and they should. You know, I'm not, and if that's what they want, so be it, but that should be done with the forethought. That should not be done because you're just putting rules and regulations in place and you don't know the consequences. The mortgage business, for example, is, you know, not largely, 80% out of banks today. And just be careful about what you wish for.
So you bought First Republic. You've had, I imagine, now a good look at what's inside it. What did you find out?
Yeah, no, we had a good look before we bought it.
Okay, that's reassuring, but anything that you found out
We had 800 people working around the clock for a long time to look at something like that. And in reality, look, they did some things really well. Like if you talk to their customers, I'm getting calls and emails and great culture, great customers and things like that. Right. Their credit is kind of pristine. You know, that's good. So, of course, we marked all the market and we're all in very good shape. We've hedged all the interest rate exposure together. We've got thousands of people now going out learning about what their best is. We want the best of both. We're not the kind of company that comes in our way or the highway. And so there's no surprise there. You know, it had to make sense for shareholders, but you know, this notion that it was an unbelievable thing, no, it was a nice thing for shareholders. That's I have to do that. But we also really did it to assimilate the banking in a way that's very safe for the system, and it didn't cost uninsured depositors, didn't cost the FDIC, it cost the FDIC as little as possible. But I also want to point out, I'd be fine if they want to change the rules a little bit to make it easier for a regional bank to buy a big bank. And the other thing about big banks, which again is, I know, but the thing about big banks, we need healthy big banks. We have the best banking system in the world. You know, and you want
You're
that.
You're very big.
Yeah, but we're not. Banks are becoming smaller and smaller as a part of the global system. So when they look at banks, they say, oh, it's big. But when you look at the banking system to the system, mortgages have left, a lot of private credits left, certain trading functions have left. A lot of things are going to leave. You have Apple, you have the neobanks, you better be a little more thoughtful about when you mean banking per se. You know, we do small banks can't do. We do like banking large corporations of 50 countries around the world to move $10 trillion a day. You know, it's hard. So these are big, complex things. We're not big and complex we want to be. Yeah. We're big and complex because the people we serve are big and complex. We bank countries, the World Bank. You know, we do a lot of things. And yes, we also bank consumers in the United States. But I want the community banks to thrive. I mean, like I said, we want to do everything we can to help them. We didn't want this to happen. We didn't cause it to happen. The second it happened, we knew it was bad for all banks.
Are you too big to fail?
I don't know what that word means anymore. I mean, we're not going to fail, and I don't know what that means. But we certainly didn't mean it to be an advantage. So, you know, we've asked all our people when this crisis happened, I don't want anyone soliciting any client or any banker from any bank that's, you know, regional bank or community bank, et cetera. So,
is there anything else that you'd be buying? I mean, some of the smaller banks fall,
no,
you know, fund.
I doubt
That's it.
No. I mean, we're going to have a lot of blowback on having bought this one, but it was the right thing to do, you know, but we'll get the blowback. But again, my job is this, people at this thing, they always look at like the financial deal. Forget the financial deal. 800 people working around the clock. 10,000 people deployed now to consolidate systems, risk, fraud, credit, payments, branches, real estate, vendors, technology. It's a lot of work, you know, and it distracts us from those other things. And so, you know, like I said, we did it. It was marginally beneficial for shareholders. Yeah. It was good for the system, but and you know, now we have to be prepared for the other side of that mountain.
How worried are you about the debt ceiling? So Donald Trump yesterday in a town hall with CNN, A, did not seem too worried, and 2, actually told Republicans to stick to their guns.
Well, one more thing he doesn't know very much about. Let me put it in 2 categories. One is actual default. That is potentially catastrophic. And you can go through a million ways, but anyone knows that's potentially catastrophic. And I don't think it's going to happen because it gets catastrophic. And the closer you get to it, you will have panic. And so the closer you get, you have markets get volatile, maybe the stock market go down, the treasury markets will have their own problems. It's amazing you already have certain T-bills trading at 3% and right next to them 5%. This is not good. And people should remember the American financial system is the foundation to the global economic system. And the closer we get, more panic. We might get downgraded. The last time we were downgraded, we had like 65 or 70% debt to GDP. Now it's 105. Now our deficits are 2 or 3 times that we had back then. So, you know, we better be very careful. And I wish we didn't get there at all. I'm respectful of both sides. Who, you know, one side wants to use it to make up for. We got jammed down their throats, you know, and I would love to get rid of the debt ceiling thing, but please negotiate a deal.
Do you think that it'll be, at the end of the day, the markets that will spur a deal? That we have to get to the point where there's panic?
It's a really bad idea. because panic becomes something that is not good. And it could affect other markets around the world. But yes, at the end of the day, if it gets to that panic point, people have to react. And we've seen that before. And the other thing about markets is always remember, panic is the one thing that scares people. Like they take irrational decisions. I remember even in '08, people were selling certain securities at 40% of what they would be worth if we had a Great Depression. But they were like, I want out, I want cash, I'm not betting my family's money on this or my company's money. People will panic, and again, we got to be very careful about getting close to a situation that causes that.
Did you get a call from Janet Yellen about this?
I'm not going to talk about personal calls I'm getting. We've all spoken about debt ceiling. I mean, everyone, that's everyone. There's no...
But for big banks, are you ready actually, how do you prepare for a possible
We have
default?
a group of people who are very smart, who are looking at, again, it's very unfortunate, it's time consuming, hopefully it won't happen, but it affects contracts, collateral, clearinghouses, clients. It affects clients differently around the world. You have to then anticipate what people are going to do, which is very different than the legality of it. And and the closer we get, the more those, kind of that war room will start. Now it's taking place once a week, but my guess is sometime call it May 21st, it'll be every day. And then it'll be 3 times a day. And then it'll be much more conversation with clients about what they need to do to help to get them through it and things like that. It's very unfortunate.